Bitcoin holders, get ready because the price of BTC is about to experience a significant move, as suggested by its daily Bollinger Band coiling up. The last time we had this much of a compression was between November of 25 into January of 26. That led to us falling from the 90s into the $60,000 territory. If we go back into history, then we can also see between May of 25 into July of 25, we had a bull flag, and that led to a higher price of Bitcoin. Many instances where we saw the compression of Bollinger Bands, and that results into dramatic volatility. I expect the same. Which way is Bitcoin going to go? I'm going to share my opinions here on today's update, so watch until the end. We're going to talk about Michael Saylor and how he managed to buy 3,985 Bitcoin in just 24 hours' time. The last moment that I checked this tab, which was 2 minutes ago, this was sitting at 3,888. How many in dollars does that equal to? Well, I'm curious to do the math myself. Price is sitting at $70,000. So today, Saylor was able to buy $276 million worth of Bitcoin through his preferred equity called STRC. Is this a Ponzi scheme or is it genius? I'm going to share my thoughts on today's video. We will end off with yesterday's CPI data. What do I project for FOMC? Tomorrow's important economic data releases and crude oil. So if those topics sound interesting to you, make sure to destroy the like button, subscribe to Become a Crypto Kid for daily content where we cover everything markets. And if you're looking for a place to be trading Bitcoin cryptocurrencies, check out the first link down below for LevX, where you will get exclusive member updates when you sign up to the Crypto Kids page, which is completely free to do so. After you sign up to LevX with the first link in the description, you can check out Weeks as well, where you can trade Bitcoin and other cryptocurrencies, and BTCC. Second link will give you access to the traditional financial markets from a price-based perspective. So you can get exposure into things like Brent crude oil, you can get exposure to even a couple of American stocks. Check it out if you want to do TradFi or get exposure to the prices and volatility of TradFi. You can do so on BTCC and get a pretty cool bonus as well. With that said, let's begin with the introduction and give you a little bit of a blast from the past. Guys, 6 years ago today, we had lockdowns all across the world beginning, and it sent Bitcoin from $8,000 all the way into $4,000. Can you believe it? That was 6 years ago. 6 years ago, Bitcoin was sitting at $4,000. Today, we're at a whopping 70, and people are unhappy. People don't care. People are bearish. People think that Bitcoin is going to go to zero and it's over, and they've lost all faith and they've lost all hope. Imagine 6 years ago where we were. Let's celebrate how far we've come. It's more than a 10x return. It's almost a 20x return we're talking about here. Unbelievable times. I can't believe it feels like decades ago, really, but it was only 6 years ago. Today, I decided to take a step into a direction of happiness. I've always wanted to be an actor, and I got the opportunity to try out and audition for a role in a micro series drama. It is the bear market, and I ultimately believe, I'll give you a hint, in the direction of which I think Bitcoin will move in. I ultimately believe that Bitcoin will continue lower for some more time. So it's important that during such bearishness that we go and follow pursuit of our dreams. And acting has always been my dream. So wish me luck. Hopefully I get the part. If I do, I'll be one of the happiest people on this earth because I've always wanted to be an actor. We'll get into CPI, but Bitcoin, the Bollinger Bands are squeezing. You know what it means. You know that we're going to get a significant move soon. I reiterated and emphasized when we got this candle to 74K, when everybody was rejoicing and we're extremely happy and we're calling for 90K, 100K, we said, let's wait for 2 daily consecutive candle closures above 72, which would mean 2 daily consecutive candle closures above the upper Bollinger Band. If we get it, then I would expect a move into $84,000, which is the bull and bear market support band. Historically, we've always seen moves into the bull and bear market supports, but in bear markets, we got rejections. that happened following a retest to it. That's what I would be expecting. But if we do not get 2 daily consecutive candle closures above, then I wouldn't be chasing any sort of bullish dream. So today, we're sitting at 70. It is currently the 13th of March, 2026. When I go to the 4 hourly time frame, we are shaping up to create a miniature bull flag. And I don't want to give anyone any sort of false hope, okay? But here goes my two Satoshis on what I personally expect on Bitcoin. The critical line, the critical price line, we can remove the Bollinger Bands for right now. The critical price line to escape is plus or minus 72K. You need to break above $72,000 with still two ideally daily candle closures above it to say, hey, you know what? We're out of this range. We're out of here. We're going to make our move into the bull and bear market support band. We do have a bull flag. We have a bullish pennant slash a bull flag. So it increases our odds of at least trying to hit 72K by about 70%. If Bitcoin escapes from this resistance, the yellow resistance, and hits 72, I'll hold my breath. I'll start to get a little bit nervous, right? In a good way. If we can close above 72 for 2 daily consecutive candles, not trap investors, like most people fell into the trap back in the 5th of March, then I will increase my long positions, which I already have existing on Levex that are in profits, and I will aim to take profits from those longs at 84, add to my shorts, because I have a head short too, close my longs, add to my short, and then ride the next wave down. It's as simple as that. 72 corresponds with the upper Bollinger Band on the daily. That's the only thing that I would be personally looking out for. Before we get into inflation, Michael Saylor is doing something insane. His common A stock, which is the MSTR stock, is currently at a 1.18 MNAV. Everybody and their mothers, actually, you know what, including myself, had their doubts about strategy being able to purchase more Bitcoin when Bitcoin prices are in a bear market. Once the MSTR Common A stock is at 1.18 MNAV, how in the world would they be able to do any significant purchase? We had our doubts, but we forgot that Michael Saylor is thinking 200 years ahead of us. He saw this, so he launched something called preferred equities. He launched a bunch of them. One of them is called STRC and is experiencing a lot of demand recently. It's basically like a bond, but it's not a bond. It promises a peg at $100 and gives you an attractive yield. So you buy this thing, it hovers at $100, hopefully, and it will hopefully continue to give you high yields, and it's backed by Strategy's Bitcoin holdings. Sounds pretty incredible, right? Almost too good to be true, because it is. It's very attractive because the sell is interesting, right? You buy this assets, you buy STRC. Once you buy it, the more demand there is, the price of the stock fluctuates. It goes to above $100. It's not a stock, but it goes to over $100. So they issue more shares of it to bring prices back down and stabilize it, almost like an algorithmic stable coin. And with those new issued shares that are sold, they buy more Bitcoin OTC. So today there was so much demand, they bought 4,000 Bitcoin. Yesterday, they bought 2,500 Bitcoin. The demand exists because of the low volatility and because of the attractive yields. But there is a caveat. Of course, like everything, there is a caveat. How is this yield paid by Strategy? Strategy have an income from their software business. Strategy last year made $450 million from their software business. Most of their net profits came from their unrealized Bitcoin holdings, which they cannot capitalize on because they're not going to sell their Bitcoin. So, how on earth are they going to pay for the dividends that are supposed to be divested into investors who have STRC, who have STRF, who have STARK, and all of these different dividend paying products? Well, they are given by the cash that MSTR holds. They hold about $2.25 billion. The Common A stock was used to raise cash to buy Bitcoin directly. That's what they have been doing since 2020. But very recently, until about a month or two ago, they raised cash from the common A equity to keep as a stockpile in order to pay off the dividends for the upcoming around 2 years on these new preferred equities that they have launched. So it's attractive as an investment as long as strategy can pay for these dividends. The dividends can, by the way, change. It can be halted, but they compound if they get halted until strategy can pay them off again. So it's a little bit too good to be true. I would be careful. Strategy at current MSTR stock prices can raise another $27 billion worth of cash to either pay for dividends or buy more Bitcoin with. But that's giving you about, if they had to raise if I mean that's giving you about 5 to 6 years of capital runway based off of my current projections. Could they stretch that for longer? Yes, but it would mean less Bitcoin buying activity. I think because of our knowledge of Bitcoin, because of our understanding that Bitcoin is in a place, it's a solution in a world where there's anti-elitism, anti-institutionalization, anti-everything, anti-system, we know that Bitcoin is the next gold, and it's in a time where it's really very much needed. I believe in Bitcoin's price action for the next few years to come. I think the 4 year cycles are tried and tested. I see us continuing to go up and up and up and up as monetary debasement continues. So, with that in mind, as a Bitcoiner, I'm not worried about strategy. But as a non Bitcoiner, I get why so many people are concerned because they don't understand how Bitcoin works. They don't have conviction in Bitcoin. So, if you don't have conviction in Bitcoin, then I wouldn't have conviction in MSTR. But if you have conviction in Bitcoin, this is genius. This is absolutely brilliant. It is absolutely genius. I think Michael Saylor has yet again done a fantastic job. If Bitcoin goes under, then we're all going to go under. But as long as Bitcoin succeeds, then I think Saylor is on track to becoming one of the richest individuals with liquid wealth all across the world. So that is Saylor. He's continuously buying. He's buying more Bitcoin that is issued into the circulating supply on a daily basis. That will generate a supply shock. Maybe not today, maybe not tomorrow, but in the next few years, it's going to send Bitcoin up. That's what I truly believe in. That covers Saylor. Let's get into inflation. Yesterday, we had the CPI data. The forecast was 2.4%. We got 2.4%. On the Moon Show, that was our expectation. We didn't expect any sort of massive divergence from the previous data released. The core CPI, which excludes food, energy, and housing, came to 2.5%. I think it's going to be different next month because next month's release will cover March data points, which trigger the direction of inflation. When we look at trading economics, the consensus or TEF forecast or the TE forecast is 2.9%. That is 50 basis points higher than what we got for Feb's data. Why? Energy has gone up significantly in the month of March, and energy builds up a major chunk of the US CPI. I think Fed Chair Powell's speech that will happen in 5 days and 21 hours will be critical. According to the things he said last time, he mentioned that the risks to inflation going up are diminishing. Employment is somehow concerning, but there's a good balance of risks. That's why we don't need to cut our rates. The risks to inflation just went up. And with the risks of inflation going up and the risks to employment still continuing its bad trajectory, honestly, I don't know what he's going to say. I just know that it's going to be volatile. We know that all the way until June, there's a very high chance that they won't be cutting. I personally don't think they will be cutting. June, there was a bigger swing, a bigger skew to them cutting rates by another 25 basis points, even 50 basis points. But after the recent geopolitical events, 75% states that they will not be cutting rates that are held today. I'm very much looking forward to this FOMC. I'll be live streaming it on the Moon Show like I always do. I highly recommend staying tuned for that and watching it live because Bitcoin will face volatility. In the release, the February data point release, you can see that energy made up the least amount of a contributor because energy saw the least amount of a percentage change year on year. But when we go into the March data, which will be released in April, I think this bar chart will absolutely fly and it will result in a much, much higher CPI perhaps even 2.9%. If we have high inflation and they don't cut rates, then you can kiss goodbye to a euphoric Bitcoin all-time high in the short term, or anything that has to do with altcoins increasing and making our altcoin bags richer. That's very unlikely. President Trump today mentioned, where is the Federal Reserve Chairman Jerome Too Late Powell? He says he should be dropping interest rates immediately, not waiting for the next meeting. I completely disagree. I think in this environment, with it being so uncertain on what will happen with geopolitical risks and tensions, I think the most sensible thing is to keep rates where they are. Speaking of geopolitical tensions, let's go into crude oil. The US released 172 million barrels of oil from the Strategic Petroleum Reserve. The last time we spoke about the IEPA introducing, or the G7 bringing their own crude oil reserves into the market to manipulate and suppress the significant upside which crude oil has been experiencing. If crude oil remains at $100 for another few weeks, it will result in catastrophe for the S&P 500, which we're on set to creating anyways. We broke below the 20-week moving average. We broke below the 20-week moving average, closed below it back in when? This was April, May of 2025. What did that lead to? A move from the 6,000s into even the upper 4,000s. Dramatic move to the downside, dramatic crash. I do not like this S&P price action. I think we have seen a rounding top, and I think we will go lower. If energy prices remain at $100, the drop will be faster. Another cool point of TA that has been highlighted by my friend Crypto Burb was a retest to the incoming crossover, which is taking place on the Nasdaq between which moving averages did he put in? He put the 50 MA and the 200 MA after a double top. This is extremely bearish. I am very bearish on the S&P 500. I do not like how it looks, and I know we kind of sidetracked over there, but I had to let you know my feelings about the S&P 500. The US released 172 million barrels to try and control the price, but following the IEPA releasing their own reserves, the price of crude oil ironically went to the upside instead of going to the downside. To me, that's concerning. America released 40% of their strategic petroleum reserve, 40%. And President Trump described it as a little bit. 40% they released. Many people have the information wrong. They think that America has 45 billion barrels at their disposal in their strategic petroleum reserve. Wrong. They have less than a billion. This 45 billion number makes up the total crude oil reserves from private companies, from individuals. It's not representative of the federal government holdings of crude oil. Federal government crude oil holdings are less than a billion, and 40% of them have been used in trying to suppress the price. Not good. President Trump says the US will make a lot of money when oil prices rise because it's the world's largest oil producer. Maybe the oil companies will make money, but can you imagine the costs of that inflation that will be transferred to the consumer? They will be paying the price. Oil companies will make a fortune, okay, but the American person or people all across the world will pay for that price. So I disagree with this statement. US oil reserves are set to decline by 41% to their lowest levels since the 1980s, after America announced a 172 million barrel release. By the way, they're going to have to fill this reserve up anyways. So when they do decide to do it, they'll have to be forced to buy in to fill that reserve up. And that contradicts this statement too, because the federal government will have to be, okay, maybe they're going to pay their own companies to buy it, but still, the federal government will spend money, and that's going to be money spent from the money printer going back online. That leads to even more inflation. So in a nutshell, things are not looking like the best. Let's hope that Bitcoin sees a break to 84K. At least it will put a smile on our faces. But until then, I will be still making videos on this channel on a daily basis. So subscribe, stay tuned for more, and I'll see you all on my next video very soon. Take care, guys, and as always, bye-bye.